It's an important time to keep informed and stay informed with what's happening in the market right now so that buyers and homeowners can make good choices. A lot of times I talk to a first-time home buyer and they say, I know I can't buy a house right now. And what I would suggest is have the conversation with the lender, let them get some information. And a lot of times I can go back to that borrower and say, yeah, you are ready to buy.
Welcome to our podcast, In the Know, where we're going to talk about the latest trends in real estate, mortgages, and home ownership. Today I have a special guest, Kirby Slocum with Arch Mortgage North, joining us today to shed some perspective on interest rates. Thanks for joining us.
Hey, thanks Brenna for inviting me. Excited to be here. It's an important time to keep informed and stay informed with what's happening in the market right now so that buyers and homeowners can make good choices.
Absolutely, for sure.
And I think we can shed some light on some of the things that are affecting interest rates and decisions that home buyers should be making right now.
I think we can too. Let's dive into it.
Great.
So as of the end of January, rates were hovering right around 6.75%. Is that correct?
That's correct.
And that's for a 30-year fixed mortgage, right?
30-year fixed conventional mortgage. Yeah.
Excellent. And how does that compare to previous years?
Well, if you go back to 2021 or 2022, we had historic lows in mortgage interest rates, right? They were around 2 or 3%. So right now it feels like interest rates are high, but historically we're really on an average with interest rates. If we go back to the 90s, for example, mortgage interest rates averaged 7 to 8%. So we're still better than we were back in the 90s, but consumers got a little bit spoiled with that 2 or 3% that we had for 2 or 3 years.
They did. So it's skewing the perspective of what is considered to be the norm or the average or the regular rates.
Absolutely. And it is perspective. And as rates have climbed here in the last couple of years, initially there was a shock for the consumer. They were always asking about rates and concerned about rates. But that's kind of passed, and they're more focusing on getting into a home, finding a place to live, and less concerned about the interest rate.
That makes sense as we get further and further away from those historically low and back into that swing of this is going to be the average and this is kind of where we're going to be for the in-term, not necessarily hopefully long-term. But
I have a kind of a cool app that I want to share with you and our viewers here today. It's called Mortgage News Daily, and it's an app that you could put on your phone. And basically when you pull it up, it tells you what the par rate, and what a par rate is, it means it doesn't cost the borrower any money to get that interest rate. So if you look at that, you can tell me today, you know, what the 30-year fixed and the 15-year fixed is for
6.99 and 6.37.
Yeah, so right around those numbers that we were talking. And why I point that out is because there are a lot of lenders out there, right? And a lot of people go to the internet to try to find out who they want to work with or find an interest rate. And a lot of lenders do sponsored. So when you Google 30-year fixed rate mortgage, the first 5 or 6 that show up are usually sponsored, it says there. So they're paying to be in those positions. And a lot of times we call it an advertised or an advertised rate. So you may see a 6.5, you may see a 5.99, but there's typically costs associated with that. So when you want to look for apples to apples, that app tells you today, this is what a par rate is, so this isn't going to cost you to get anything this interest rate. And what that can do is help you over time. You know, if you just look at that daily over 3 or 4 months, then when you finally find a house and you go into contract, you'll know you're getting a fair deal.
That's great because that's real, live, real-time information, accurate information. I think a lot of the times, you know, when we jump on Google and we see those pop up, it's like, oh, that's a little too good to be true. So it probably is. And pay attention to the fine print because you don't want to get down the road later and then find that this product isn't actually what you thought it was going to be and can end up costing you more money in the long run over the term of the loan. That's great information. Thank you very much for that. So Kirby, can you tell me, shed a little light on what is keeping rates so high?
So there's really 3 major kind of factors with there. First one's inflation, and a simple way to think about inflation is if inflation is rising, interest rates are typically going to rise when we're talking about mortgages. The other one is our Federal Reserve policies. So when we came out of 21 and 22, in order to slow down inflation, what they did is they started raising the interest rates for the prime interest rate. And what prime interest rate really is, it's the money that the Federal Reserve loans to the bank overnight. So it's a little bit different than the mortgage rates. The mortgage rates are really driven by the bond market, but they have a similar type of relationship. And then the last one is really economic growth. So people are still spending money. Unemployment rate is still low. So from an investor or lender standpoint, they're feeling that the widespread default, the likelihood of that happening is very low. So those are three things that are really kind of driving that.
That's good information. That's good knowledge. That it's explaining why we're kind of hanging where we're hanging.
Yeah.
And things aren't, progressing lower like people were expecting them to happen. Are there any signs or indicators that these factors might be changing anytime soon?
I like to be optimistic, but I don't think that we're going to see any drastic changes, anytime soon. I would say 2025, from everything that I've read, calls that I've been involved on, and when you look at what's happening in the market, what analysts are saying is, we might get down to 6.5% in 2025. There may be points or short time periods where it drops a little bit lower. A few months ago, they were saying maybe 5.99%.
Yep.
But I would say, 6 to 6.5% is probably what we'll see in 2025 from a 30-year fixed rate mortgage interest rate.
That makes a lot of sense. So from a real estate agent's perspective, we're always encouraging our buyers not to wait for rates to drop, because during the time that they're waiting for rates to drop, it's likely that prices are still rising over time. What advice would you give to people who are hooked on waiting?
Yeah, I'm not going to say anything much different than what you just said, because I think you said it perfectly. The buyer that is waiting for the interest rate to drop, they're really losing the opportunity, because historically, especially in this market, I've not seen price drop in the last 9 years. So if you're waiting for that price drop or that interest rate to drop, and that doesn't happen for 2 years, you could lose 2 years worth of equity, and depending on your price point. I've helped borrowers on a $250,000 purchase 3 years ago that are now selling and upgrading or downgrading, and they've made $80,000 or $100,000 in that 2 or 3 year period.
And sometimes that can make a difference for a buyer when they're leveling up. Say they need to upgrade the size of their home, or they need to move to a new location. Building that equity can help them get to that next venture in life, or where they need to go, or leveling up.
Yeah.
So it's very important to get in where it makes sense for yourself, so that you can start building that equity and not waste time on doing that.
Yeah. And that's exactly right. I mean, if you think about it, let's say, okay, Brenda, don't buy a house today, but save $80,000 over the next 2 years so that you have that down payment for that house that you want to purchase.
Yep.
Versus maybe buying the house today, smaller down payment, obviously, but let that equity build, and then in 2 years you have the opportunity to sell that house, which is where you're going to get that $80,000 for the next deposit for the next house.
Makes a lot of sense. Yeah. Just connecting with somebody who can help you with these scenarios, and say, sitting down, comparing apples to apples, right, and saying, it's more advantageous for you to be doing this now, and here's why. We can actually show you the progression. The proof is in the pudding.
Yeah.
We've seen it. History has proven that home prices continue to rise, and people are building equity while that's happening.
Yeah. And interestingly enough, just in this conversation, when we're talking about saving money and the equity and the $80,000, we really weren't talking about interest rates.
Exactly. Yeah, exactly. Very, very good information. So tell me, Kirby, what should buyers and homeowners be doing in this higher rate environment?
I think they should be getting informed, and I think they should try to connect with the real estate agent that can help them shop the market, but then also connect with the lender that they trust, that they like, somebody that's responsive when they have questions. But that lender also should be providing them with some options. So there's programs out there right now. So an ARM, for example, it's not super popular, but over the years it comes and goes. So an ARM program could get you a better interest rate and a little bit lower payment.
Okay.
And then something that it's always been out there, this product, but it kind of came back when interest rates started to rise so quickly, just as a reaction to try to help the consumer. It's called a buy down.
Okay.
So there's like a 2-1 buy down, there's a 3-1 buy down, and basically a fee is paid up front. And that fee actually goes into a separate account. And what it does is it reduces that interest rate for the first year or the second year, which gives you a lower payment. And that fee sets in a separate account. And each month it makes the gap between what the interest rate of the 30-year loan is and what that discount is for that particular first year or second year.
Okay.
What's really kind of cool about that is if you decide to refinance, which would be the goal, right?
Yep.
If we go into a 7.99% interest rate and we do a 2-year buy down, that takes it down 2%. So for that first year, your interest rate is 5.99.
Yep.
The second year, 6.99. And then the third year through the 30th year, it adjusts to the 7.99.
Okay.
Strategically, as a lender, what I'm trying to do is get that loan to refinance within the second or third year down to that 5.99 or 6.5 type of range.
Okay.
And then when we do that, any of the funds, that fee that they put into that separate account, that comes back to them. So they can use that to cover their refinance cost.
Okay. That's a wonderful program.
So that is a great program, and I'm not necessarily selling them a program,
Yep.
but I'm saying find a lender, talk to them, ask questions, and learn about what your options might be that you don't even know are out there.
That's good information. Thank you very much for that. So as we come to the conclusion of our podcast today, Kirby, do you have any additional information or tips or tricks for our viewers today?
Yeah, a lot of times I talk to a first-time home buyer and they say, the first thing they say is, I know I can't buy a house right now. And what I would suggest is have the conversation with the lender, let them get some information. And a lot of times I can go back to that borrower and say, yeah, you are ready to buy. And then we start dialing in the numbers, figuring out what fits into their budget and their affordability. And then I also partner with the real estate agent to make sure that they're in that. So they can start helping that buyer find a house that fits their budget. And then we just kind of hold hands and go through the process together and make sure that they're informed, all their questions are answered. And then when we get to the point where they're buying their house the closing day, they feel good about everything and they're excited about the opportunity.
That is always the end goal, is it not? And for those buyers that unfortunately may not qualify, I assume that you don't just send them out the door, right? I'm assuming that you show them, hey, if you do X, Y, Z, accomplish these small goals, you could put yourself in position to be ready to buy a home. Maybe that's a longer term goal, but I'm assuming that relationship can continue where you can continue to work with them and say, let's do these things and get you on a plan that gets you the trajectory to getting you in a home.
Yeah, absolutely. So, again, I'm going to sell local a little bit, right? So if you hit that button of the rocket ship flying off and you're doing everything on your phone and it comes back and it says, sorry, you're not eligible, that's pretty defeating, right?
Very.
If you're working with somebody local, not that I always do a lot of face-to-face, but I get on the phone, they know I'm here, I meet in the real estate agent's office, I can invite that client in, but we can put together a game plan because I'm not going to say everybody can buy a house today, but everybody can buy a house.
Yeah.
And we can give them a roadmap on how to do that. Now, I'm going to give them the roadmap, and obviously they're going to have to go do the work. But if they put the work in, in a lot of cases, 2-3 months, a year, they could be in a position to buy a house, which is pretty exciting.
That is very, very, very exciting. And I would add to that, building a team for yourself as far as having a quality lender that you can trust and that you can talk to. Somebody that speaks your language, I think is really, really important. And somebody that can work well with your real estate agent because it really takes that team type of aspect to be able to walk you through the whole process, get you to that end game, but get you there so that's comfortable and it makes sense for your situation because everybody's situation is different.
Absolutely.
Yeah,
100%.
wonderful. Yeah. Thank you so very much for being with us today. We really appreciate your information. If you or anybody that you know has questions about the home buying process, the lending process, please reach out to us. Click the link below for more information. We're happy to strategize, game plan with you, get you to accomplishing your goal.
Yeah.
Thanks again, Kirby.
Thank you.
Thank you, everyone. Watch for our next podcast where we're talking about information for first-time home buyers. We look forward to seeing you then. Thanks.